Hello, everyone. Welcome to the ARC Payments Forum. Today we have our panel on trends in payment-driven customer experience. We have some great experts here to talk to us about what's happening in payments right now and what is going to happen, hopefully. Let me just introduce, go to the next slide, introduce myself. I am Jennifer Watkins. I'm the Director of Payments. And I don't know, are we having trouble getting to the next slide? It sounds like it. But I'll introduce Kevin Heggs with me also. He's hosting the ARC Payments Forum. He's the manager of, oh gosh, I gave him the title and now I can't even remember what it was. Payment Acceptance and Processing through ARC. Welcome to our panel. Let me just do a little bit of housekeeping as we get started. You can see in WebEx or GoToWebinar that to the right there's a place to put in questions. So for those who are attending, put your questions in and we will get to those at the end. For right now, I'm going to introduce our panelists real quickly and they'll introduce themselves in a little bit more detail. We have Ian McAllister, he's with Trustly, Dan Stanbridge with Paysafe, Paul Paradis with Sezzle, Zach Ornelas, and Paul Swanson from UATP. And I'm very excited to have our moderator here, Pascal Burg. He's been a great partner to ARC, a man with a lot of experience in air and travel and banking and finance. He's been a consultant at Edgar, Dunn Associates for over 20 years. He works in the Paris office at this point. I think I first met him, he was with at the San Francisco office. So I'm just going to hand it over to Pascal to start the panel.
Great, thanks a lot, Jennifer. Hopefully everybody can hear me okay. And sorry for the French accent. So my name is Pascal Burg from Edgar Dunn. As Jennifer said, we've got a great panel for you today. The way we're going to run it, I'm going to ask each panel member to quickly introduce themselves so that you know who is on the panel. Then I'll just give a couple of minutes overview of what we're going to discuss. You'll see that we're going to have three parts to our panel, and there will be some poll questions as well. So you'll have the chance to vote 4 times during this panel, and we'll be looking forward to your responses. So let's start with introductions, and we can maybe do it in the alphabetical order. So Dan, do you want to maybe introduce yourself first?
I will do, thanks Pascal. So hey everyone, I'm Dan Stanbridge. I'm the SVP of Merchant Risk for the Paysafe Group. I've worked in payments for over a decade or so now, focusing on risk management with prior experience in the industry, in the insurance industry, credit risk capacity. 7 of the last 10 years I've spent with Paysafe. We're initially tasked with looking after our digital wallet proposition, a role that subsequently evolved into a wider risk management role. For those of you not familiar with Paysafe, we're a global payment company supporting both the sort of traditional card processing across North America and Europe, but also under our Skrill and Nutella brands, we operate a global digital wallet with a heavy leaning towards alternative payment methods as well as consumer engagement. And we also support an eCash brand, which supports a cash to e-money consideration as well. As you may have guessed from my accent, I'm based out of London, our headquarters in London. Really pleased to be with you all today amongst a great panel to offer my humble insights and opinions on the trends that we're across payment-driven customer experience. And yeah, obviously a very interesting and topical subject. So thank you also for ARC for inviting me to join the panel today.
Thank you. Shall we go over to Ian?
Sure. Thanks, Paul. And, thanks for having me. So Ian McAllister, based in the Bay Area. I work for an online global online payments provider called Trustly. We are a company that leverages consumers' online credentials when they check out an e-com or a travel site to process a non-card payment. We're based out of Stockholm, Sweden, and we've been in payments for over a decade. But we have we process payments across Europe and in the US. We have over 10,000 merchants on our platform, over 500 million consumers. We're a licensed payment institution in Europe's PSD2 regime, and also kind of a trusted partner in Nacha. My job is more or less open banking and helping kind of the company strategy here in the US. Been in payments for a while, and most recently with kind of launching Zelle with early warning. So thanks for having me.
Thank you, Ian. Now we have two polls, so we'll go with Paul Paradis first from Sezzle.
Everyone, Paul Paradis, president and co-founder of Sezzle. Sezzle is an alternative payment method that enables your consumers to pay for their purchases with installment plans. Our core product is an interest-free pay in 4 solution, and we recently launched a longer-term installment solution in partnership with Ally Bank for bigger ticket purchases. I started Sezzle back in 2016 with our CEO, who was a friend from business school. We're now publicly listed on the Australian Stock Exchange and are live with over 35,000 merchant partners that accept our payment method. I live in Minneapolis, Minnesota, where Sezzle's headquartered with my wife and 3 children. And we're a bit newer to the travel space, having focused historically on fashion, beauty, and health categories. So very excited to be speaking with you all today. Thank you.
Thank you, Paul. And I think we got so excited that we even launched the poll question already when we listened about your introduction. So we'll have the poll a bit later on. And then we have the UATP crowd. So maybe I'll let Paul and Zach introduce themselves.
Yeah, the crowd. I will, for the sake of this call, maybe I'll be the other Paul. So Paul Swanston with UATP. If you're not familiar with UATP, we're a global payment network owned by the airlines with the mission of keeping the cost of payment low for the industry. I'm based in Austin, Texas, and I look after, on the commercial side, our travel agent relationships as well as merchants and issuers across Europe. Pleased to be here.
Thank you, Paul. And Zach?
Hello, everybody. Zach Ornelas. I've spent my 20-year career in the minority world of payments. Spent a number of years with American Express and then working in closed-loop B2B payments with another company and came to UATP and now operate as the vice president on our charge card side, where Paul and I look after all of the issuers as well as the merchants for UATP. Pleased to be here.
Thank you. So let's
Pascal, before we move on, I might just recommend that the panelists we all mute, because there's a little background noise. So maybe if all panelists mute, it'll help.
Thank you, Paul. That'd be great. So let me give you just a 1 or 2 minute background for this panel. We've, as consultants focused on payments and in travel, we've done a lot of research recently with airlines, travel agencies, and other merchants. And there are really 3 key topics that seem to be your priorities. You'll be able to vote on the poll on them. And this is also the way we structured the panel. So number 1, we had a lot of interest about how can payment help me protect or increase my revenues as a merchant. So that's when we'll be talking with the panel about the customer experience for cards. Of course, the US market is still very card-centric. We actually did some research that was sponsored by UATP before COVID. And we asked airlines in the US, what's the percentage of cards among their online direct sales in the US? And you won't be surprised to hear it's 86% cards, right? But this is very high compared to like in Europe, where it's only 66%. So there's a sense that a lot of interest among the airlines to see, well, can I grow that proportion of alternative forms of payment? Is it wallets? Is it bank transfers? Is it buy now, pay later? So that's the first topic we'll be talking about in this panel. Second topic that was a priority, of course, is cost. How can I, as a merchant, either maintain or reduce my total cost of accepting payments? So these are around fraud losses, the merchant fees, the operating expenses to handle refunds and chargebacks. So that'll be our second topic. And the third topic that came out of this research very clearly and not surprisingly is all the issues around cash flow and the risk, right? There's a lot of risk in the airline industry, including the bankruptcy risk, whether it's airlines or travel agents. And so the whole relationship between airlines and the acquirer is definitely top of mind. So that's the third topic for our panel. So that's that's how we're going to have our discussion. We spend about 15 minutes on each one of the 3 topics, and we'll also have a poll for each topic. So before we go into the panel, if I can ask Judy or Jennifer to put back the quick poll that we just showed a couple of minutes ago. I don't know if you can still vote on it. Some of you have voted already, I believe. But here it is. So if you can, if you already voted, if you can vote again, if you don't mind. So this is asking you as an airline, as a travel agent, or whoever you are, what's your main priority? So if you had to choose one, are you more focused on using payment to help you protect or generate extra revenues for your company? Number 2, are you more focused on reducing the total cost of accepting accepting payments? As I said, it could be merchant fees, it could be fraud losses. Or number 3, are you really focused on cash flow, on making sure that you get settled by your acquirer, for instance, as quickly as you can, or maybe trying to see if you can negotiate your holdback, but really focusing more on the cash flow side. So it's anonymous, of course. You can all vote. And I believe, Jennifer, that we have over 100 people attending the webinar. So I think it's a pretty representative sample of the travel industry in the US. So Jennifer, I don't know if you can tell if most people have voted, and maybe we can show the results if it's the case.
Well, we've got 57% that have voted. Let's give them a couple more seconds here.
Okay. That's pretty good.
Yeah,
so if you have the majority of people that have voted, and if I comment just quickly, and then of course we'll comment with the panel. It's fairly spread out, but it confirms that as we're coming out of COVID, a lot of you are focused on kickstarting sales, and whenever we talk to airlines, alternative forms of payment, customer experience, having the best card authorization rate, definitely the topics we hear most. So 38%, doesn't surprise me. And then an equal split between cost and cash flow. And I assume if you had done that survey maybe 2 or 3 years ago, maybe cash flow would not have been as high. But we'll talk about that later on. It's definitely a topic that has become more of a top of mind topic for many, especially for many airlines at the moment. So these are the 3 topics we're going to talk about. So maybe if you can stop sharing the results, and I'll stop talking now. I'll be asking the questions. So the first topic is this, kind of how can we use payments to protect or increase revenues, and what are the trends that we're seeing there, especially for the US market. So can I maybe start with Paul and Zach, because you're involved with both on the card side, you're involved also involved with quite a few alternative forms of payment like PayPal and others. Are there some obvious trends that you're seeing? Are you seeing still a lot of interest on the whole topic of alternative forms of payment in that aspect of trying to help protect or increase revenues?
I think definitely, Zach. Oh, sorry. Go ahead.
You got it.
I was gonna say, sorry. I was just gonna say, we've, fortunately or unfortunately, had a kind of a front row seat in the space that we sit, seeing everything from soup to nuts, going all the way back to, let's say, a year ago when we were in maybe survival mode, which prompts more of a liquidity. And I suspect the real answer to the question, the poll question that people wanted, it was a 4th one, it was all of the above. But survival, right, was a big focus on liquidity, preserving cash flow. And then as we look to recover, then I think it becomes more of a focus on cost. And then as we look to grow, it is more of a focus on revenue. And so even though we might not be quite in the growth mode, I think a lot of us across the industry have sort of switched that mindset. And so we're operating, it seems, in more of a mindset now of growth, anticipating what's around the corner with optimism. And so we are seeing a trend moving from a keen focus strictly on liquidity all the way up to growth. And one example that I'll use, was almost a happy accident from the past year, was the emergence of prepaid accounts, corporate prepaid accounts. Companies that willingly were kind of coming forward and telling airlines, we would like to park some cash with you. And I think in the very beginning when that started happening, we were all like, what? We were surprised. Are you serious? But it makes sense. And it's sort of become a trend now to see an emergence of this use case of corporate prepaid accounts with airlines, because companies at the time were looking, they had maybe budgets, use it or lose it type of budgets. They wanted to park cash, and if the airline can offer any type of incentive, let's say you park $1 million in a pre-funded situation and the airline gives you an incentive for doing so, then you can get a good return on your money for doing that. So it was an interesting dynamic that evolved, but certainly one that I think is going to continue beyond just the measures of COVID that we took against COVID. We're going to see it progress.
Okay. Thanks for that. And on the consumer side, we had a lot of interest in the survey we did for UATP for alternative forms of payment as a way to help generate revenues, especially installment, bank account and wallets. So maybe if you go to Sezzle, your first, Paul, you mentioned you especially get involved in other verticals, beyond travel. So what trend are you seeing? Are there specific verticals that are more interested in buy now, pay later? And is the whole idea, is it really is it a revenue play, or do you have other drivers that kind of confirm that there's interest both on the merchant and on the consumer side, right, to use your kind of product?
Yeah, we're seeing demand increase really across the board. We did start with, like I said, fashion, beauty, health products. I think those make a lot of sense because they're discretionary purchases that are just enough of a stretch that somebody would want to spread it over time. And also the profit margins in those categories are fairly high for the retailer, so then they can afford a slightly higher cost of acceptance, which BNPL typically represents relative to a card payment. But we are starting to see it expand into other categories like travel. I think the bigger ticket interest-bearing loan installment providers have been fairly common in travel for some time now. Companies like Affirm, Uplift. And so I think you're going to start to see, though, some of the other models of BNPL, specifically around interest-free, merchant-funded, gain steam just because of how much consumer demand there is for those types of BNPL solutions. And if you look at, any study on BNPL, interest-free is, top 2 or 3 most important feature of BNPL for a consumer. It's not hard to understand why, right? They want free money, but it's a conversion play, right? So the reason we exist is because we help increase conversion. Price sensitivity is the number 2 reason for card abandonment behind unexpected shipping costs. Now I know shipping costs don't necessarily apply to travel, but price sensitivity certainly does, right? And so we're giving consumers that purchasing power that traditionally credit cards offered, but there's a lot of people that don't want credit cards, right? They're scared by them, they can't get them. Over half of our users have been declined for a credit card in their lifetime, right?
Okay.
So it's really appealing to a different consumer base than one that would pull out their credit card and pay for that airline or travel purchase with a credit card. It's primarily a debit card user. And those people have been limited by debit cards, right? Because you have to buy what's in your bank account today. And so if we can creditize that bank account in a way, but make it easier to understand and more financially responsible through an automated budgeting tool, if you will, it helps with the conversion side. There are other value propositions as well. We promote our merchant partners to our user base, and we are shown to drive revenue to our merchant partners to the tune of, I think, 5 to 10% of our total processing volume originates from our marketing channels, right? So that's a big piece. And then I think also knowing that card programs are so lucrative, especially for airlines, we can actually serve as a funnel into those card programs, right? Because we can attract those young, thin file consumers, turn them into a loyal customer, and actually share data with the airline and help them build their credit along the way so they can qualify for that card, and the airline can target them with the card offer when they're going to be approved to create the best customer experience, right?
And just for the people on the panel on the call that maybe don't know, so thin file means consumers that haven't built a credit history yet, right? So they are early stage, and you're helping them build that credit history so that then they might be approved for a credit card, right?
That's right. That's exactly right.
So that's another. Okay, no, that's very interesting. Ian, another alternative of payment, beyond wallet and installment that's often thought about is the whole leveraging open banking, leveraging instant bank transfers. Are there some learnings as well from other industries or in travel? Is it mostly again a revenue play, a market reach play, or is it mostly what we'll talk about later on, a cost reduction play for merchants when they look at like a provider like Trustly?
Yeah, it's funny that you highlighted like Europe versus the US, because it's absolutely the right trend to look at when you think about how open banking is evolving in the US. We're behind Europe, we're behind our European counterparts for sure, but we're catching up, especially from a technology standpoint. So like the banks, the open banking infrastructure is actually a little bit more advanced, I would say, than Europe, and so that's just like a platform to help support. And to your question is like, is it more revenue or cost? I mean, look, I'll talk about the cost for sure in the next one, but there's absolutely a revenue play. And to what Paul was saying, it's like it's cart abandonment. We see a significant amount. I mean, we look at it from an e-com, like all kind of across verticals, and what we see is about 70% of the carts are abandoned kind of at the last final stages. And the reason for that is because there's a couple of reasons. One is like they don't want to enter their credit card information, or they don't trust the site, or there's not enough payment options. And so I think what you're hearing a little bit and what you're seeing in the alt payment space is providing kind of the right balance between like wallets or online banking payments like Trustly, or buy now pay later like Sezzle. Like those give consumers optionality and drive down kind of that abandonment rate. And I know it's probably much lower for sure in the travel industry for abandonment rate, but still any percentage point of pull through is going to drive revenue. And so like that's going to drive again higher approval, higher pull through, higher revenue, just by providing kind of alternatives for consumers, and alternatives that consumers either, like Paul was saying, thin file, no file type of consumers, and or consumers who just they trust their bank more, or they just they're used to like the more digital type of payments that are emerging.
Okay, no, thanks for sharing that, and that's why with Jennifer we were keen to have companies like yourself and Sezzle on the panel, because I think it is very interesting about how it can be used for specific demographics. Maybe focusing a bit more on cards with Dan. I mean, I know you're involved in cards and also in alternative forms of payment, but you're mostly involved on the risk side. But do you get requests from your colleagues or from your merchants to say, look, what can we do to avoid declines on our cards, and you get a lot of pressure to try to again help them with conversion rates? Is that a lot of the conversations that are taking place? And do you think your merchants are focused mostly on this revenue play, with whether it's with cards or with alternative forms of payment?
Yeah, for sure. I think across the board, everything that the guys on the panel have said it all rings true. From the alternative payments perspective, we're getting a lot of requests to support in that area, not to necessarily replace traditional forms of revenue, but to complement. It gives merchants access to markets that they perhaps haven't had access to in the past. Like our eCash solution, for example, that gives them access to the unbanked, effectively, people that don't necessarily have cards, don't have a bank account, but they have cash. They've got cash to spend, especially in developing areas, LATAM and Eastern Europe and Africa and places like that. They've got cash, they've got mobile phones. We help get that cash into that e-money environment in order to spend online. And a lot of those areas, they're upwardly mobile as well. They're keen to travel, obviously, barring the last year or so, but prior to that and moving forward, they're going to be upwardly mobile. So we're getting a lot of requests to support that growth in the APM piece. The other consideration as well is from the consumer side. What we're seeing is that consumers are becoming more savvy. The last year there's been obviously a lot going on in the industry with consumers losing money and being out of pocket because of cancellation of travel flights or their inability to travel. So they want to know that they've got a degree of protection when it comes to making a payment. So that's one of the key pieces that we're seeing on our side as well. When we're talking to merchants, whether that form of protection is there for their consumers, and how we support them. But equally, as we offer a consumer-facing product, the consumers are asking us, are we going to be protected in the event that something happens here? So I think there's both sides of the coin to consider there. And yeah, it's just something to be mindful for airlines and travel agencies as they move forward.
Great. Just before we show our next poll, wanted to go back to Zach, because I may have interrupted you when your colleague Paul was mentioning his perspective. Do you have anything to add, Zach, from the UAT perspective? Any also words of wisdom, any trends you're seeing about how payment can really be leveraged to help airlines either protect or increase their revenues?
What I really see from my point of view is just the diversity in types of payments, and whether it's consumer spend in leisure travel or B2B spend, it's about meeting your customer in the form of payment they want to use. And so obviously UATP and what Paul and I look after is B2B spend on a charge card product. UATP has a massively growing arm of our network. In the industry and every industry, Paul from Sezzle can talk about this as well. It's about meeting your customer in whatever form of payment they choose to use, and it's about making that available. And so diversity of choice, diversity of finding the way that people want to and can spend, and then also creating the incentive for them to be able to do so. Our focus, as Paul did talk about, and really is our chief focus, is ensuring that we make that diversity of choice available and providing it at the lowest cost possible, because we're owned by the world airlines, and then also helping those airlines or whoever the issuer may be, setting up the right incentive for the end customer to choose that as a form of payment. Okay,
great. So can I maybe ask Judy to show us the next poll, and just to close off the discussion on how payment can support the revenue side. We wanted to ask you again, you as an airline or travel agent or whoever you are, assuming that you have some revenue side payment projects you're working on, what are these projects, or what's your focus? Are you currently implementing alternative forms of payment like buy now, pay later, or wallets like Apple Pay or PayPal, or bank transfers like what Trust is offering? So is that what you're working on? Or number two, are you really focusing on the customer experience on the payment page? So maybe mostly around your UATP and Visa and MasterCard and Amex cards, and really making that as good as possible? Or is it just about approval rates, maybe more in the background of whatever it takes with smart routing and so on? Or maybe you have no project, maybe you have no project currently on the revenue side because you focus on the cash flow, or you focus on the cost reduction, which are the next two topics. So we'll give you maybe a few more seconds, and especially when you can tell us that we have maybe a majority of people that have replied.
We've only got 4% now, so we need more people to vote. People are distracted. I think that's what happens sometimes. But
Jennifer, I do it right there that organizers and panelists don't vote. I'd give you another percentage point.
There you go. We've got over half. Maybe we close it out now.
Okay. So let's be very interested to see what we see here. So okay, very interesting. So we were right, Jennifer, to invite Ian and Paul from Sezzle on this panel. A lot of interest, a lot of you, slightly more than a third, implementing alternative forms of payment such as buy now, pay later, wallets, or bank transfers, and it's really good news to the second one. It's great to see, because to be honest, compared to many other industries, when you speak to e-commerce merchants, they're all obsessed about the customer experience on the payment page, and sometimes we saw some airlines not so focused on that topic. So it's great to see that many of you are working on that, and only a small number, 19%, have no such project. So that's maybe you can use this panel as a way to get internal investment from your colleagues, right? So please use us if you need some ammunition to get FTEs or budgets to help you on this project. Just before we move to the next topic, anybody on the panel, maybe especially Paul or Ian or anybody else, are you surprised, or does it confirm what you expected?
I'll jump in. I just took a picture of that and selected to my marketing team. So just want to let everyone know if you're on this, we'll be in touch. No, but like I think it's the theme that everyone's saying. It's like, having the optionality. The consumer base is, more digital. They're younger. The younger population is more, especially in the U.S., is getting more aware and comfortable for sure with digital payments, online bank payments, that kind of stuff. So I can see that as, it's not surprising. It's great to see, but it's just for me, it's not surprising. Just know the demographic change.
Okay, great. Any other thoughts, or shall we go to our next topic of cost reduction?
I'd just say,
So,
Pascal,
go ahead. Yeah.
I was just going to say, it's not a huge surprise. I think to the point that made earlier, Europe has been sort of edging towards alternative payments for a while. I think the US is now very quickly catching up, and I think we'll see that sort of area of alternatives sort of explode as we come out of COVID and what have you over the sort of forthcoming year, 18 months. And I think it's prime for airlines and the travel agents to step in and take advantage of that, to, like I said, mentioned earlier, to complement their traditional sources of revenue.
Okay, thank you. And Paul, I think you had a quick comment, and then we'll
yeah, just a final thought. The conversations that we're having would suggest that our partners are going from responding to customer payment demands to anticipating them and thinking about what's around the corner, and not so much the what, but really the how is kind of the holdup. And we have obviously people here on this panel that can help with the how, but it's certainly more of a shift, kind of like from survival to recovery and then on to growth. It's from responding to over to anticipating, is what I would say based on the conversations that we've been having.
Great. Well, talking of anticipating, what anticipating the topic of costs, right? So here the background is like you'd expect any business, right? Of course, airlines, OTAs, and others are still focused on what can I do to maintain or reduce the total cost of accepting payments. And when I say total cost, it's not just the fees, right? It's also making sure there is no friction internally or avoiding having many people, doing manual tasks. So let's maybe start with UATP, Zach or Paul. As you said, that's kind of your mission in life. So have you seen any trend? I mean, what has changed with COVID? Do you have even more interest from airlines to talk to you because they want to see how you can help them reduce the cost of accepting payments, or have you seen any new things, any new requests in that area of cost reduction?
Yes, of course. I think that not only a reduction in cost and a key focus on making sure that you are utilizing the lowest cost of payment. What we saw the biggest uptick in was the massive need global was about how to manage refunds. And so where UATP was really able to come and provide a specific service and solution for both corporate travel as well as leisure travel, and for all travelers included, was around what happened when I couldn't fulfill this flight and how do I provide a credit for the future. We were able to do that at by far minimal basis points in cost for an airline, and it's still an open issue. So if anybody's on the call that still has those open credits and trying to figure out how to manage that process, which is a complicated process, UATP can help you. That was a big piece. There's also a key focus in how do we continue to drive down the cost of payment. Again, as Paul mentioned at the very beginning, our entire reason for existing is to lower the cost of payment for airlines, whether it's in AFP, whether it's in traditional charge card side. It's about creating efficiency, security of payment, limiting chargebacks, the lowest fraud, and providing it as an industry standard at the lowest possible cost.
Okay, very, very interesting. Maybe if you go to Paul at Sezzle, sometimes when we speak to our merchant clients, they say, look, I'm very interested in accepting alternative forms of payment, but I'm worried that there might be a big implementation cost or that there might be operating cost around the way I receive the report, the way I do reconciliation. So is that something that you try to handle? How do you try to minimize things like implementation cost and your back office activities like reconciliation? Is that something you focused on as well to avoid this extra cost for merchants?
Absolutely. Yeah. When we first started out, it was more about integrating with the e-commerce platforms that merchants are using, but that's now shifting to integrating with the PSPs that they work with to help ease the reporting and back office stuff, right? So it's certainly something that we look at very closely at Sezzle.
Okay. Okay. No, that's great, because that was a topic we heard, and with Trustly, I guess, and you alluded to it Ian earlier, that's one of the core value proposition potentially of instant bank transfers, right? That it might be maybe not percentage based, or maybe it's a more attractive either fee level, or there might be no no chargebacks, for instance. So is that really the core part of the cost reduction value proposition? Are there other aspects, and do you think that will translate well into travel in the US market?
Yeah, for sure. I mean, look, we actually have pretty good integration to the travel industry in Europe for sure. So the model works. Just for a little, little insight, we use the open banking type of platform to more or less real-time insights into the bank account, and then we provide, Trustly provides a guaranteed payment for the merchant or the airline. So guaranteed product, we leverage kind of a ubiquitous ACH rail. We're implementing into RTP now, so we'll use RTP when that makes sense. RTP is interesting. It's not going to be ubiquitous. So the clearinghouse is real-time payments rail. So we'll be able to augment that. We'll just be kind of like one pipe, but be able to kind of spread out over multiple rails. And what we offer to the merchants, it's a guarantee, so there's no chargebacks. Very high approval rate, because we actually have like real-time insights into the bank account. So like that's an increase in revenue too there. And then because we leverage these rails that again have been in place for a century, a little less than a century, is we're able to provide kind of the payment cost for the merchant at something lower, definitely lower than card, definitely lower than unregulated Durbin debit, and then very comparable to regulated Durbin. So it's kind of a win-win-win for merchants, and I think the key thing is creating that value prop for the consumer. So it's kind of like this flywheel. So merchants like it, consumers like it, but as you can see, the trends are in the right direction for sure.
Okay, very good. Dan, with you, another topic we heard in our research in terms of cost reduction or cost topic that merchants were worried about were fraud losses. It looked like in some sectors, I mean, I know that the sales went down, but the percentage, fraud sometimes was going up, right? Some consumers double dipping, or just people trying it, or maybe some merchants having less focus on fraud, and also the operating expenses of managing this huge increase in refunds, in chargebacks. Is that what you've heard as well? And is there things that a player like you can do to help mitigate these potential cost issues?
Yeah, for sure. So yeah, both points you're right. So fraud was pretty evident over the course of the last year, where consumers, whether rightly or wrongly, sort of took the decision to take advantage of the fact airlines were and travel agents were under strain, and perhaps missed opportunities that they would otherwise have taken to unearth fraud or what have you. So yeah, cases of double dipping were pretty evident across the industry, and yeah, let's say consumers were trying to take advantage. Anytime that you see any form of economic strain situation, you're going to see increases of fraud. It's just a general trend, and COVID was no different. So the key there is to make sure.
Do you see it trending up in your merchant portfolio, and is it going back down? Or I don't know how much you can share in terms of numbers, but what does the curve look like?
Yeah, so it definitely, attempted fraud was definitely on the increase at the start of COVID. So when you look at the numbers through sort of March into April, May, you definitely see that increase of attempted fraud. Luckily, we've got a very good risk team within within Paysafe. Obviously, I'm biased, so I'm going to say that, but yeah, we worked very closely with a number of our travel agents and a number of our airlines to identify and prevent that, and equally give them advice on what they could do to help internally support that. One of the key things that we saw linked to the point that Zach made earlier was obviously the heightened levels of refunds. What this did unearth was that for some operators, they've probably not invested in their back-end structures in the past and in the build up to this, so they had pretty inefficient processes to deal with large-scale reconciliation because previously they didn't need to, but over the last year sort of proved that they needed to help with that. They needed some help with that reconciliation, so we put in place additional resource to help support merchants through that piece and process refunds, chargebacks, whatever they needed. Equally, that sort of skipping forward in terms of, I know we're going to cover off security methodology and risk mitigation. We put in place quite a bespoke way of securing against risk, which the default to that is that actually that massively helps support the refund process. So we was able to handle that almost entirely for some of our operators without them needing to work through that process themselves, so almost outsourcing their refund process to us in order to manage that.
So maybe just before we go there, and just conscious of time, shall we maybe do the third poll question for the audience, just to finish this second topic of total cost of exceptions. So if Judy or Jennifer, you can maybe show the poll to the audience. And here, what we're assuming that you have some kind of cost reduction initiative or projects internally or some kind of focus. So are you mostly focusing on automating internal processes that you have as a merchant? So rather than people handling refunds and chargebacks, you're looking at automating that and using software rather than people. Number two, are you mostly trying to engineer some kind of smart routing to really kind of avoid declines and exceptions? And number three, are you doing RFPs or RFIs to work maybe with new gateways or new acquirers because you hope maybe to get better fees, better arrangements, or to have maybe less reliance on a single gateway or single acquirer? Or maybe again, you have maybe no project focused on cost reduction because you focus either on the revenue side or on the cash flow and risk, which is going to be our next topic. So if you can choose one of these four options, and again, if we can get most of you to vote so that we can get more or less a representative sample, and then we'll get people in the panel can take photos again to show to the marketing team if it's in favor of what they or to promote their own job, like for Dan. So Jennifer, are we?
Okay. Yeah, I think we're close enough. Let's see the results.
Thank you. Okay, very interesting. So nearly half of you, well, just short of half, are really focusing on automating. So that makes a lot of sense, right? Because I think a lot of airlines and others were, of course, not expecting such a increase in refunds and chargebacks and exceptions, and you had a team of people working on that. So it was both costly, to the airline and not a good customer experience. So that makes a lot of sense. And then the rest is kind of split. And again, a few of you are doing RFPs, and I understand that for more clients that maybe not too many are doing that right now, but definitely thinking as things get better and when they're in better shape, to look potentially at working with new gateways or new acquirers. So that confirms what we see, and we expect that to increase. So anybody in the panel who wants to react to these numbers, any massive surprises or any comments from anyone before we go to the last topic for the panel?
I think this probably just,
go ahead.
I was going to say, sorry, I think this just probably supports one of the comments I just made, that some operators have legacy systems that perhaps are a little bit inefficient, which has been born out of the last year. So driving that automation it helps them, it drives efficiency, and yeah, I think it makes sense to me.
Oh, definitely. And it links back with the first topic. It does improve the customer experience, right? Because I think no one enjoys waiting for 2 months without any responses, or in one case I had to deal with a fax. I just couldn't believe that. Of course, I don't have a fax anymore. So let's go to our last topic, because I want to make sure we have about 5-10 minutes on that topic, and then open up for questions, where Jennifer will tell us if you have questions from the crowd. The topic of cash flow, right? So So what we heard in our research is that some airlines were concerned about their relationship with acquirers that, of course, saw the risk, right, of the airline going bankrupt, and then the acquirer is on the hook for reimbursing the consumers for unflown tickets. So we heard discussions about increase in holdback, increase in guarantee, delay in settlement. I think the worst I've seen is one airline was paid not even at departure; they were paid a week after departure. So of course you can imagine how bad that cash flow would be compared to what was the case before COVID, where an airline might be expected to be paid maybe a couple of days or a few days after booking, but before departure. So with that background, wanted to see from the panel if they're seeing the same trends and if they have a view of where the industry is going. Are we eventually going to go back to the old days, or are we going to a model where, in some cases, merchants like airlines might be paid maybe at time of departure, or maybe only just before or just after, or maybe a completely different model? So maybe let's go back to Dunn, because I assume that's what you do day in, day out, and then we can see anybody else in the panel who has a view on that. So Dunn, I don't want to put you on the hook, but you don't have to say what you've done as an acquirer. But what's your perspective on that topic?
Yeah, I think for sure last year highlighted a number of issues across the industry. From a payments perspective, as a risk leader, obviously concerned about what was going on in the market. I think as a general trend, we saw appetite being cut, we saw reserves, cash holds being put in place, which then naturally puts a squeeze on merchant liquidity, which often can actually create the issue that you're trying to avoid. So I think in general, there's going to be a push towards new security methodologies. I think the days of the sort of traditional cash holdback are almost archaic now. That there needs to be thought about how to support merchants through difficult situations, while also supporting the acquirer being on the hook. As like I say, as a risk leader, I want to be sure that we're protected, but we need to do it in a mindful way that protects and supports our merchants as well. So I think, as well as the security methodology, there's a massive piece around data as well. Traditionally in the payment space, sort of somewhat arbitrary average numbers are used, average fulfillment days or what have you, which is fine to an end, but in order to really support the merchant, you really need defined data to understand exactly what aspect of processing or volume you're on risk to, overlay and scheme rules, especially in the face of vouchers that are being issued and credit notes, understand the liability timeframes. You overlay that to a new security methodology, you get a way there of really supporting the merchant, supporting their liquidity, and doing so in a way that you're not suddenly going to reach out and say, we're going to hold all of your cash back, or we're going to hold a portion of their cash back. You can do it in a way that they know the terms, they know they're going to receive the money on X day at X time, which helps them manage their cash flow. That's what we're working towards in Paysafe. We think we've got a really unique product and setup that helps do that. But I'm sure there's a number of different ways to achieve that, and I think we will see an emergence of these new methodologies over the coming year.
Okay, thank you. That's very clear, and that's, I guess, more on the card side. On the alternative forms of payment, Ian and Paul from Sezzle, I don't know how much you can share. Typically, do you have a standard way? Do you typically pay merchants at that time, at the time of booking, or does it depend on the merchant profile? Can you maybe share? Again, nothing confidential, right? Because some of it might be confidential.
I can jump in, Paul, if that's cool with you. So I think the way we think about it is a couple of different ways. So the pay-ins giving some really high level of assurance around forecasting their own cash flows in. So by providing kind of a guarantee to the merchant, they know that they're going to get the funds from us. We do settle, through ACH, so it can be, a day or a couple of days later. We also have the ability to settle through wire, and I mean that's to the merchant. But again, giving them predictability around their cash flow ends. And then, on a payout, so like a refund, we actually provide like an instant payout. So there's a consumer experience where it's like immediate for them, and then we'll settle up with the merchant. So it's kind of a combination of that. And then, like I mentioned earlier, so ACH, as people probably know, it's business days only. When we have RTP, if there's a cash flow need, for sure, RTP will allow us to get to, provide instant settlement to those merchants, especially in the pay-ins. So we kind of think about it a couple different ways. One, predictability. Two is just the understanding when you're going to get those ins and outs, and then providing them like kind of that best consumer experience so that we can front the more or less, front the money on the refunds and then, settle with them later.
Okay. And Paul, on the Sezzle side?
Yeah, we at Sezzle, we assume all credit and cash flow risk for our merchant partners. So that's definitely one of the values of working with a BNPL provider like Sezzle, is that we actually pay you in full at the time of purchase, or I should say, we batch ACH every day, so you'll get paid the next business day. And we actually do something that's, I believe, unique to our industry. I've never seen it before, but if a merchant decides to hold their money with us and not pull it out the next business day, we actually pay them a yield because they're helping us lend money to our consumers, right? We'd rather pay our merchants than pay a bank for that money, for that debt, essentially. And that's something that's heavily utilized by our merchant partners, is they keep their funds with us, the ones that have the cash flow to do it. And then for refunds, we'll just deduct from their holding balance with Sezzle. So there's like a daily holding balance for purchases made the previous day, and we just deduct from that.
Okay, great. And maybe we only have a minute left before we show the final poll and we go into Q&A with the audience. So Paul and Zach, from the UATP perspective, is it still what you're hearing? The whole cash flow and risk issue is still top of mind, and is there anything that potentially you can do on your side to help merchants there?
Definitely. I think that going back again a year, and Zach mentioned this earlier, where the quote unquote refund solution, which, technically didn't really exist before, the call came in, hey, can you help us? And we said, yeah, actually we can. And so now we have basically stood up an entire program for an acute need, but we're going to see it beyond now. We're in discussions with a number of airlines about having something similar to that on an ongoing basis. And the reason being, it is a win-win-win. Somebody said that earlier, and I think that's the sentiment that I've kind of captured over the past year or so, is that there is less of an adversarial us versus them type of sentiment, and more of a we're all in this together. We can't afford for anybody to go down or for anybody to fall on hardship, and so we have to come up with ways going forward to where it is more of a win-win-win. And I think Dan nailed it in that acquire to merchant kind of relationship, and not getting ourselves into a situation again where, entire companies are just brought to their knees with one phone call.
Yeah, no, definitely. So, okay, thanks for that. So can I ask Judy to show the last poll? So that's the last time you have to work as an audience, and then you can also share your questions, and we'll have 5 minutes left. So the last poll is on this topic of cash flow, to understand what is it that you are doing. Here we're assuming that you're an airline or an agent, but some kind of merchant. So are you trying to work with new acquirers and beyond your current acquirer or acquirers? Or are you focusing on renegotiating contract with your existing acquirers? Again, this is very much in a Visa and MasterCard world. Or are you focused on implementing new payment models? So we've seen some airlines like Air Canada that have gone into a monthly subscription fee, or there are some airlines that charge after the book. They hold your fare. They say, well, book now. You can hold it for 10 days. And you get charged 10 days after your initial booking. Or maybe you have no project like that. Maybe cash flow is fine, or maybe you believe there's not much you can do. So this is the last time you have to work as an audience today. So if you can please vote, and again, I'm sure very interesting to see your results. Jennifer, are we getting there in terms of responses? The audience is not too tired.
Well, I think we've got a good group. Let's wrap it up. And
okay.
Yeah.
Okay, pretty spread out.
Pretty even.
So
Yeah,
pretty even. Yeah. So quite a few, about a third, are looking actually at new acquirers, which of course is maybe not very easy right now, but you're trying. And as you'd expect, renegotiating contracts. That's of course the first point of call. And quite a few are experimenting, right? We definitely hear quite a few of you trying subscription, hold my fare, using your loyalty points, what have you. So which makes for a very dynamic marketplace. So I'm conscious that we only have 3 or 4 minutes left. So rather than getting the panel to comment on that poll, I would suggest we stop sharing it. And Jennifer, maybe we go over to you to see if there are questions from the audience, and if you can maybe tell us what you want us to respond to in terms of audience questions.
Okay, so we unfortunately don't have a whole lot of time, which is fine because this has been great conversation. There's one question, and it's I think probably for Ian, around what the hurdles are to open banking and for Trustly to gain merchant adoption. And so what are the hurdles in the U.S. market for open banking options, real-time payments?
But consumers are entrenched in card payments, right? That's that's what it is. They're ordained to go to their card, and so working with merchants to create some type of tender shift, campaigns to get consumers, and we're already doing that with some of our merchants, where it's like, if you move to using your online banking, there's benefit for the merchant. There's obviously benefit for Trustly, and we need to ensure that there's like that pull for consumers. So I would just say, just like the market adoption, but the trends we're seeing again is that consumers are getting more digital, obviously, and this is nothing novel, but that trend is helping push people towards these more online banking, and you see online banking as just a traditional way for consumers to sign up for any service. It's not even just a payment service. So a lot of different kind of services on the web or on their phone. So it's just getting more normalized in people's behavior. So that's probably the biggest hurdle. But like I said, I think it's kind of creating those partnerships with the merchants to create that value prop, because there's definitely some margin there to help them. So,
I mean, I think that is absolutely true in the airline industry in the U.S. Just because the airlines, they love their card programs as well. So you've got merchants who love their programs, and you have consumers who love their programs. So it really does make it challenging. Paul, sort of the same question for you. What do you think challenges might be in getting into the airline industry with the buy now, pay later option, or just sort of growing that business in this area?
Yeah, I think convincing airlines that the cost of interest-free solutions, installment solutions, is going to be outweighed by the incremental sales that it provides. And I think we're going to have to show that in the data, and find ways to develop cost-neutral pilots with airlines, so they can really see the data without taking on additional risk or cost, so that they buy into that concept. I think it also is going to be interesting how BNPL adapts to the fact that this purchase is around an event in time, and depending on when the purchase is made relative to the time of the event, the risk profile changes, right? And so having to develop a more sophisticated pricing model to account for the variability in risk that we're taking on and the airline's taking on in that transaction, depending on when the purchase is made. So I think those are, a couple things that are unique to the airline industry relative to other categories where BNPL has been so popular and grown so quickly that we're going to have to figure out.
Yeah, and I think there's more and more entities getting into that because of the challenges that the airline industry's had in the last year. So yeah, seems like maybe some partnership opportunities. If we were meeting face to face and having cocktails at our payments forum, you might be able to meet some folks that can help you with all that. Pascal, I don't know if you want to sort of do a wrap up question, or what are your thoughts?
Well, I think we hit the hour, so maybe we could carry on for hours. It's so fascinating, and usually we do when we have a cocktail or beer, which I understand hopefully we'll do next year, Jennifer, right? So
yes,
I
exactly.
think I'll close up now and hand over to you to close the panel.
Okay. Well, I want to thank Ian from Trustly, Dan from Paysafe, Paul from Sezzle, Zach and Paul from UATP for joining us. Really appreciate your participation today. Really looking forward, like I said, to doing this face-to-face next year. I anticipate it's going to be in the DC area. There will be more information coming out on that in the very near future. Special thanks, of course, to Pascal, always a great moderator. Lots of knowledge in the industry that we're able to leverage that he shares with us. So really appreciate it. Have a good afternoon. Thank you.
Thank you.
Thank you.
Bye-bye.
Thank you, everybody.
Thank you.